Hello, everyone. George Christie here with Wine Industry Network. I'd like to welcome you all to the Wine Industry Sales Symposium. Now, we've got a terrific couple of days planned for you. We're going to be obviously looking at the wholesale channel, offering some good advice and tips on how to improve your performance there. And of course, we're going to be looking at the direct consumer channel with the same goal in mind, right? Seeing what tips we can offer up that will hopefully improve your company's performance in that category as well. And we've got a really cool session that's taking a look at some of the new technological platforms that are now available that are really changing in a very positive way the way that we impact with our consumers. So a terrific few days. I want to thank you all for spending some time with us. And now, before we get started, I want to thank our sponsors. We would not be in a position to be able to offer something like this for free without their support. So beginning with our presenting sponsor, RedChirp. RedChirp has also got a terrific platform, really impacting the way that we engage with our consumers. So thank you, RedChirp, for all your support. I want to thank our session sponsors, beginning with Comcast Business, Vinexpo America and Drinks America, Comerica Bank, Wine Retail, eSeller, Quimmy, Mather Economics, and Harvest Hosts. Thank you guys for all of your support. Now, before we get started, I just want to remind everybody to take advantage of the chat feature. You know, it's always our goal to make sure that our sessions are as interactive as possible. And so what we always do is we pre-record these sessions. We do that for quality purposes. But what's really great about it is that while you're watching the presentation, those speakers are watching the same broadcast you are. They're in the chat room and they're able to take your questions as they come to you. We don't need to wait till the end of the session to engage with your questions. So please take advantage and submit those questions. Well, let's get started with our first session, which is titled State of the Wine Market and Wholesaler News. In this session, we're going to basically take a look at the performance of the wine category. And also, we're going to take a look at what's happening with our wholesalers across the country. So I think that about covers it. I'm going to hand it off to our panelists today, Danny Brager, Dale Stratton, and Jake Hageman. Take it away, guys.
This session is sponsored by Comcast Business. Beyond fast is technology that makes business boom. And Vinexpo America and Drinks America, where the wine and spirits world meets in America.
You need more people to taste your wines, join your club, and stay in it. RedChirp's here to help. Get more and better leads from your website. Requests go right to your phone, so no one has to log in and staff it. And after they leave, you can still continue the conversation and make more sales. Club members should feel like friends, and friends text each other. Texting with RedChirp is so easy. You'll never have to buy work phones or share your personal number. Plus, you'll reach people 10 times faster and get more responses, too. With all these new sales, you'll need a better way to collect payments. Do it by text with RedChirp. It's more secure, more convenient, and you'll get paid 6 times faster. Text messaging will get you more leads, close more sales, and build stronger relationships. You make it possible. RedChirp makes it easy.
Well, thanks, George, and hello, everybody. My name is Jake Hageman. I'm Assistant General Counsel at the Wine and Spirits Wholesalers of America in Washington, D.C., and really excited to be here today talking about what's going on in the wholesale sector. And my job is to try and tee up the landscape for the presentation that Dale and Danny will be giving in just a few minutes on the number side of what's happening in the industry, which I think is of real interest these days. So I'll jump right into it. Just for those that don't know, WSWA is the national association representing the wholesale tier of the wine and spirits industry. We have over 350 members and distribute above 80% of the wine and spirits that goes into the retail marketplace. A lot going on in the last year. I've skipped an agenda in the spirit of brevity, and we'll talk just briefly about a couple of the big things we've been thinking about. Certainly, like we all are, the last year has been framed by COVID. It was designating emergency businesses and essential businesses in the beginning, looking at what the sector what would happen as on-premise pivoted to off, and all of the questions around supplying retail partners who were going through these rapid changes. So changes that were already happening accelerated last year. I think that's a theme you hear a lot these days, and it's very true. Certainly within our sector, while it was not a year for major merger activity, we did see the continued growth of new wholesalers entering the industry, and across nearly all wholesalers, a continued expansion of the use of B2B e-commerce tools to streamline both the purchasing and ordering process and create simplicity for customers, and also allow wholesale sales representatives to be most efficient and add the most value to their time in the marketplace. So I think e-commerce within the industry, as distinguished from e-commerce between tiers or to consumers, is something that is real noteworthy within wholesale. So lots of new platform development to speed those and enhance those processes. And again, just at the landscape level, 2020 really was defined by, what does it mean? What are your customers needing in the time of great change? In particular, you'll hear it a few times today, as on-premise became heavily involved in off-premise and delivery, and all the pieces that went hand in hand with that. So I think, you have to look at those together for the last year, but e-commerce throughout all the tiers and within each, as well as a really significant growth in delivery and to-go sales from the on and off. And I think Dale and Daniel have some interesting observations there on what that might mean in the longer run. Pivoting from the industry to sort of the policy landscape impacting the wholesalers at large, three topics I would touch on today. I think in the I'll take the legal piece of it first. Since 2019, when the Supreme Court last ruled on a beverage alcohol case, there's been an uptick in cases challenging laws that restrict interstate shipping of wine by retailers. At last count, I believe there were 9 cases of this type. Several of them have been resolved with those laws that restrict such transportation being upheld. But it's certainly an issue that we're following closely. As the question percolates throughout the country. I'd also note that a number of states have taken actions to enforce these laws using a piece of federal code called the 21st Amendment Enforcement Act, which allows them to bring actions against out-of-state shippers that are out of compliance with their state laws. It gives them jurisdiction over those out-of-state entities. So that's an interesting development in the shipping space, which certainly is a critically, very, very significant one today. And at this time, there's really not any specific case we're watching in the pipeline for potential Supreme Court review, but you never know. Federally, just this week, there's been a lot of advancements made in the tariff space regarding shipments to and from the European Union. So I think that continues to dominate. While not really wine specific for US producers, certainly European wines have been subject to those tariffs. So looking at that, and just this week, really opening the gate back up for US exported spirits. So an important international trade element at play in Washington, as is a recently introduced piece of legislation that would enable the U.S. Postal Service to ship alcohol, as do FedEx and UPS, put in as part of a larger effort to look at Postal Service reform. So 2 federal items that are notable within the beverage alcohol sector in DC. But I felt like I couldn't leave the policy slide and all of the thinking we're doing here without at least touching on cannabis just briefly. You'll see here in this green on green map, I probably should have picked better colors, but we're now at 18 states in DC that have legalized adult use cannabis, representing, I believe it's just over 50% of the US population. There are significant questions about what action Congress will take and when to either deschedule and create a regulatory system. We don't really know, but what steps might happen federally to create more of an interstate market that doesn't exist today, and thinking about what that means. And I'm not the one to speak to this, but to potential impacts on the beverage alcohol industry and coexistence. We will see as that unfolds, but certainly states are taking the lead, and it could be that some other states join that list even this year still. And just for 2021, it's useful to note that it was New Mexico, New Jersey, Virginia, and New York that were all added to this list. So some significant markets coming online there. And lastly, in that space, CBD, keeping in mind that while it is still federally prohibited by FDA for use in food and beverage, continues to be a prolific product in the marketplace, and asking where that may go in the coming years. So a little bit of a potpourri there of policy items, but I think there's some of the things that are top of mind when I ask myself, what are we seeing around the country? So just to wrap up, I wanted to touch on what we saw out of this year's state legislative session. We follow state legislatures closely, and last year was the year of COVID response. And what we saw this year was a year of continued COVID response. Specifically, the bulk of legislation of note that we've followed has related to on and off premise delivery, curbside / to-go sales, and the expansion of those privileges. And by that, I mean taking, for instance, states that had to-go sales of sealed containers at the on-premise and adding to that mixed beverages. Texas would be an example of that this year, where previously factory sealed bottles of wine were eligible for sale. This year, mixed beverages sealed at the restaurant are included into that to-go privilege. And certainly looking at the role of e-commerce in my mind, thinking about third-party tools that enable shopping, customer shopping, online shopping from home for delivery. Third-party delivery is prevalent in the majority of states that do, of the 40 that have off-premise delivery now. That number has grown from the low 30s to over 40. So to us, a very significant piece of the marketplace, thinking about the role that delivery, which we consider to be, same day, local, from a retailer in your jurisdiction to your home, has a lot of room to run and really fulfills an important customer demand for that very timely service of products at their convenience. So just to close, here's again another interesting color coordination I've done here, but I did want to flag, I think I mentioned Texas, but both Florida and Oklahoma also made permanent. And I should say, with regards to go and sales and delivery, a lot of states enacted temporary laws to address this. We're looking just at permanent laws here. So we're over 40 states with home delivery from off-premise retailers, 20 plus from on. And within that, you have some like Texas, Florida, and Oklahoma that now have included mixed beverages into that, which generally do include single serving glasses or sealed at the restaurant containers of wine. And again, in light blue, you'll see states that have done some form of delivery legislation this year from the off-premise. And I'll just lastly mention, as my time runs out here, RTDs, a huge piece of the industry. And one of the things we're seeing is legislation to either accept certain types of RTDs based on the input alcohol or ABV or both, sometimes from the control system or sometimes into expanded channels where, for instance, grocery may not previously have been available for a spirit-based product, but because of the ABV of the product, it becomes, by legislation, becomes eligible for sale in new retail channels. So interesting, given the very strong rise of the RTD market, which I'm sure we're going to touch on here in just a few moments. So with that rapid fire run through of the country, I'm going to turn it over to Danny to take it from here. Thank you.
Thanks, Jake, for that quick run through and thorough run through. That was extremely interesting. Lots going on as usual. And thanks, George, for having us here today. Thanks to everyone who's listening and watching this morning. Dale and I are going to cover a lot of ground. We're going to talk about key wine and beverage alcohol trends, and even more so these days, how to interpret those numbers, as well as the key consumer drivers impacting wine demand. And we'll talk a little bit about what may be ahead of us. So neither of us have to tell you that 2020 was unlike any other year that we've experienced, hopefully one that we'll never experience again. It's been a difficult one. Personally, it's been a difficult one in our businesses. For me, I often found that wine paired well with a global pandemic. But of course, for me, wine pairs well with pretty well anytime, all the time. So maybe I'm not the best representative sample. But you add in wildfires, and given everything that was going on as an industry, I think we performed admirably with those challenges really bringing out the best in our creative thinking. You know, whether that was virtual environments or delivery and curbside pickup, drinks to go, creative, socially distant drinking occasions, obviously more and more purchasing being done online. And consumers were receptive to a lot of those initiatives. And ultimately, of course, we've got to meet the consumer need to be successful. Now, when I think about consumer needs and trends and think about like what's really new and different versus what it was pre-COVID or what was just accelerated, I think I come down for the most part to just an acceleration of trends that we had seen previously, whether that be consumers seeking experience in authentic brands and stories, certainly seeking flavors, being exploratory of all the products that are out there, which is certainly part and parcel, certainly for wine. And maybe the one that is new and newer is being that we were shut out from the on-premise. Getting back out is certainly part of the experience we're looking forward to. Then there's convenience, whether that be in how people shop or buy products. And that's certainly where e-commerce comes in, which was accelerated during COVID. And then the other aspect of it is packaging and serving sizes and occasions for which people are seeking to purchase and consume our products. A growing interest, but it was there before. It was growing before in wellness, better for you type products, as well as part and parcel of that, looking at labels and being able to understand as much as consumers can about what they're putting in their mouths to both eat as well as to drink. And then a continuation of premiumization or trading up. We're going to touch on that, but I think it's a little bit more nuanced this year, given obviously the huge channel shifting from on-premise to off-premise, and the fact that people couldn't spend money in things like sporting events and travel and concerts that they might have been used to before. And so perhaps that was part of the trading up because they could buy things like wine and spirits at more expensive price points versus before. So lots going on. But before we look at some of the numbers, Dale, what do you think we should be aware of when we look at those numbers?
Danny, as you said, the entire industry has been disrupted, and this was the biggest disruption that likely any of us will ever see in our lifetime within the beverage alcohol industry. And that also means that the data has been disrupted. So as we look at this, think about those questions that are over there when you start to look at it. We're going to see numbers that are going to come out that are hard to believe. And oftentimes, if something is either too good or too bad to believe, question it and ask what the other side of that is and what it looks like. From two people who have spent well over 20 years each in the industry looking at numbers, we're going to see odd numbers coming out, and they're really going to start to kick in here in the next, I think, really right now and into the next 6 months. We're going to see a very, very strange set of numbers. Interpret them and ask questions before you take actions on them to make sure you're doing something that's correct. Danny has some examples of that.
Yeah, I was going to show you a couple of examples of just what Dale was talking about. So here's one example. We're looking at through Nielsen eyes, retail off-premise channels, and we're looking at growth rates versus the year prior, starting from March of 2020 when COVID, everyone was becoming aware of COVID and reacting to it, all the way through on the right-hand side to the first week ending in May. And blue is spirits, red is wine, and gold is beer, including hard seltzers. So just look at the highs and the lows. And the highs and the lows are because of what was going on and because of what we're comparing against. So going back to those first month, the first few weeks in March, we saw that huge pantry loading and stocking up when people didn't know, what they were going to be able to do. So they're rushing out to stores to stock their pantries. Then we got into some normal periods, and I call them normal, but it's kind of COVID normal, when growth rates were still way, way above zero because people weren't going to restaurants and bars. Then we got into holidays where people weren't getting together as much as they had been in previous years, or if they were getting together, it was a shorter dinner. And growth rates, you can see, dropped quite a lot, still sort of hovering around zero. Then we get into January and February, again, things sort of strong growth rates because there wasn't a lot of on-premise activity. But then now we're into March through going forward, and two things are happening. One is we are starting to return into the on-premise, and we're comparing against the year ago, which were those huge numbers. So you go from huge pluses on the left to huge minuses on the bottom. So again, to Dale's point, you got to know what you're looking at, which channels, what are we comparing against? And for me, I like to look at now versus go back 2 years, pre-COVID. What was happening then? And that may give you a better picture. One other example, and this is online shopping, purchasing for wine. This largely shows three-tier online purchasing, but there's a bit of DTC in here as well. The red bars are wine sales through e-commerce channels going back a couple of years ago, all the way through to March of 2021. The black line represents the number of buyers buying online. So clearly, two things happened. One is online went way up, again, starting in March, certainly through April and May, and have stayed elevated. And the second is that the rise in dollars coincide with the rise in buyers. And these largely aren't buyers that are new to wine, or they're not new to shopping online for other things, but they're largely new to shopping online for wine. Maybe some of them didn't even know they could. But you'll also see that there was those huge increases in April and May. They're well elevated versus what they were pre-COVID. But if we compare, say, March of 2021, it's not at the level that it was in, say, May and June of 2020. So I would predict that the levels are going to stay way above where they were pre-COVID because now the genie's out of the bottle, but it may not reach the heights anytime soon of where we were way back in April and May. So lots to be aware of as you look at the numbers. After all this year of toil, where are we kind of in summary? And we're going to dig down, Dale and I are going to dig down into some of these, but at a high level, total beverage alcohol consumption on a per capita basis for legal drinking age consumers is still relatively steady. From year to year, it's sort of good times and bads. It stays relatively steady. So at the end of the day, on a big picture level, we're fighting for share. Spirits has grown very strongly, in fact, even stronger than pre-COVID, still outpacing wine growth. But as you'll see, the gap has increased between the between wine and spirits. Hard seltzers are still hot, but it's also now joined by other RTD type products right across the beverage alcohol aisle. So throw in RTD for spirits, some wine cocktails and spritzers. That whole RTD space is a very active one. And lastly, omni-channel, so brick and mortar and e-commerce, is really omnipresent. It's not one or the other. Consumers go to say a store sometimes, go online other times. And so to maximize your exposure, it's a combination of both e-commerce and brick and mortar. So with that, Dale's going to dive down into some of the SipSource numbers.
So a quick reminder of what SipSource data is. SipSource is an aggregation of distributor depletion data. And the big benefit here is that it covers all channels. So we're really looking at the complete depletion picture across all channels, including on and off premise. So it's the best representation of the three-tier sales that is available out there. As Danny had pointed out, we see that spirits are outpacing wine. And the story before this, going back in pre-April of 2020 was that we saw wine and spirits diverging from each other, with wine really going down and spirits going up. We saw them move together, and that's more common. But as we get out here, we now see, as we come with March ending data, and these are 12-month rolling volume numbers, you can see that growth rate of 5.8 on spirits versus basically flat on wine. And as we're thinking about that and we look at it, we're going to see numbers change a little bit as things reopen. But this is really going back to where we were pre-pandemic and what the situation was. If we look at it from a regional standpoint and what's happening from a regional standpoint, you can see that on the spirit side, good growth everywhere, good solid growth, really led by the center of the country. Same with wine. And with wine, it's not all bad news, because we have actually, of the 7 regions that are defined here, we do see only 2 of them down. Bad news is it's the 2 largest, being the Pacific and the South Atlantic. So you can see here that there is some hope, but the Pacific and the South Atlantic are driving growth down for the wine category. Breaking it out by premise, and no surprise, and everybody knows how bad things were in the on-premise. With SipSource data, we're able to better quantify that. So as we look at the spirits on the right, wine on the left-hand chart, and you can see here that for spirits, the on-premise was down almost 44%, where on wine, on-premise ended the 12-month rolling period of March down 51%. So we essentially cut the on-premise business in half. What that means for wine is that right now, wine's share of total business on-premise only represents 6.6% of that. That is half of what it was a year ago. So we have a lot of rebuilding to do here as we move forward. With the on-premise and the other element with on-premise, and we knew that this was going to impact accounts. And there's been a lot of discussion around to what extent will it? Well, using data from SipSource partner VIP, we were able to quantify that. So this is open accounts as defined by VIP for licensed alcohol beverage accounts. So in January of 20, you can see there were almost 360,000 open on-premise licensed accounts. As we go through the year, by the end of December, that had dropped 40%. And there were only 215,000 open on-premise accounts. We have seen a good steady build of that as we're coming here starting 2021. It's starting to flatten out a little bit, but the net of it is that there's been a 33% increase in opened accounts since December of 2020. But that still leaves a 20% reduction in the number of licensed on-premise accounts that are out there. We believe that number is going to flatten out, that growth, and we'll probably end up somewhere right around a loss of about 15% of the total accounts that are out there. I would also point out that we believe that those accounts are likely carrying fewer products. They're having to manage cash flow better and really look at that. So their selection is probably down. So as you take that many accounts out of the system, they're carrying fewer items. That means there's less spots of distribution for all of you out there to put your products in going forward. Back over to you, Dan.
I'm going to show you just another view of the kind of devastation and then the rebuilding in the on-premise. So what's different about this is from CGA. CGA measures beer, wines, and spirit sales. So these are sales, not depletions, in restaurants and bars. And these are 4-week ending periods going back to March of 2019 to the right-hand side, March of 2021. So obviously you can see, what happened when we were talking about March of last year, April of last year, where those red bars were pretty tiny in terms of its height. Then things kind of slowly build back, but till about a height in October. And then, as you might recall, COVID cases started increasing. There was another lockdown. Wine sales again started to go down. Now we're building up a little bit into March of 2021, and I expect April will be up further than that. But the height of the bar, the height of that column in March of 2021 is still below what it was last year, and certainly way below what it was pre-COVID. So it's a process, but it's coming back. It's a question of how fast, and it's a question of how fast in what parts of the country. Because way back to what Dale said originally, and you got to look at not everything happens at the same pace across the country, but people are feeling more comfortable about going out. I know I am. Based on a survey from Morning Consult, about 60% now feel comfortable dining out. That's a high. Even more so for outdoor dining, around 2/3 of the people. 55% say they're comfortable going on vacation, led by road trips. That's good for wine destination areas and the tasting rooms there. And there's certainly pent-up demand. 80% of us have either been out or are really excited about getting back out to the on-premise. So that's a bit a view from the on-premise. Let's go back to the off-premise and back to watch what you're looking, be careful about what you're looking at. These are Nielsen weekly off-premise dollar sales for wine. The red is the current year. The silver is the year ago, and the black is the 2-year ago numbers. So wine sales in the off-premise are well below a year ago levels. Remember what we're comparing against, those huge stock-up levels. But they're still well above 2 years ago because we're not fully back to, going back out to the on-premise and kind of the pre-COVID norm. So given that we want to be very mindful of what we're comparing against, sometimes I'd like to look at versus a year ago, sometimes versus 2 years ago. So here are the two comparisons. On the left-hand side is versus 1 year ago, looking at beer, wines, and spirits. And because of what we're comparing against, those huge highs of last year, business is down in the off-premise versus that huge stock-up period of March, April last year. Versus 2 years ago, because we're not fully back to pre-COVID norms, the off-premise is still growing quite strongly. So that's one point on this chart. The other one, probably more importantly for us as an industry, is that if you look at the wine numbers the wine growth numbers compared to spirits and beer, clearly this just backs up what Dale said. Wine is not growing as fast as spirits. And arguably, we're kind of at the same pace of beer growth when you include things like hard seltzers and tea, hard tea, and so on in the beer numbers. So we've got a long way to go to kind of match spirits, and we got to watch the beer side of things, which for many years was trailing wine growth, but that's with hard seltzers, etc. That picture's changing too. So we've looked at high-level category performance of beer, wine, spirits. There's one other category out there that could impact all this. Jake touched on it a little bit, and that's cannabis. So a couple things. Obviously, we're seeing more states adopting legal adult use recreational cannabis. More states across the U.S., nearly 1 in 3 adults have consumed a legal cannabis product. Cannabis comes in many formats, product formats, including beverages, and it comes in different compounds found in cannabis plants, CBD-based, which are primarily health and wellness-related benefits, or the promise of health and wellness-related benefits, and THC, which is the stuff that'll make you high. So here's a picture of cannabis beverages going back to 2018, both the U.S. and Canada. It's now just on the U.S. side, over $10 million per month. And you can see the height of the bars continue to get higher. And let me just make a couple comments about it. I mean, those numbers are certainly interesting and growing. Cannabis beverages only represents a little over 1% of the overall cannabis market. About 7% of U.S. cannabis consumers have bought cannabis in beverage formats. I also looked at wine versus beer and spirits, and wine drinkers spend a little less on legal cannabis products than the average beer or spirits drinker today. But when Nielsen and other companies have done surveys, many more cannabis consumers would consider trying a TH-dominant cannabis beverage. So it's something clearly we need to keep our our eyes on. And the numbers here are courtesy of Headset that measures cannabis sales in dispensaries. So let's go now a little bit deeper into the wines and spirits categories.
Thanks, Danny. So as we look at wine by varietal and we start to look at this is for the total table wine category, and those shares are against the table wine category. As I look at this, the bars represent share and the dots working off the right axis are percent change versus last year. And what we've seen in the last year really is this emergence of pink Moscato. And to me, pink Moscato is that convergence of sweet and pink hitting. This category is certainly more in the popular price category. It is 1.5 liter driven, but this again is speaking to that convergence of sweet and pink. Other segments that have done very, very well, Sauvignon Blanc continues to do well, and Sauvignon Blanc has been doing well for an extended period of time. That 6.5 growth rate is skewed a little bit to imports versus domestics, but both imports and domestics are actually doing very well and growing. Red blends growing 5.9%. The center of gravity for that growth is really in the $11 to $14.99 price point. That's driving the growth, and that's really where all of the growth is for red blends. So that is a move up for that particular segment. The big concern here, of course, is Chardonnay. The largest varietal continues to struggle and is getting worse in trend every quarter that we report this data. Chardonnay sales are now down 5.4%, which is significant off of that big base. Now we're going to look at this for table wines over $15. So knowing that a lot of you in the audience are focused on a different set, and this is products that are over $15. The first thing that we notice, of course, is the switch over here, Cabernet and Pinot Noir moving into the number 1 and number 2 positions. From a growth rate, for lack of a better term, aromatic whites. And as we start to look at the things that are growing here, Sauvignon Blanc, Pinot Grigio, other white varietals, and white blends. So those aromatic whites are doing very, very well. The Chardonnay growth rate not as severe here, or the decline not as severe as it is in the total. That's good news. At least we're getting a bit of less loss up there, but still concern for the category overall. Now looking at the other areas of the business. Sparkling wine continues to perform very well, and we've seen a bit of a bumpy ride for some of sparkling. Champagne, which is very leveraged against the on-premise, really took a big hit early in the pandemic, but has bounced back nicely and is now growing 8%. Prosecco is growing 7.1%. You can see that the sparkling other, and essentially sparkling other is everything that isn't a Prosecco, a Champagne, or a Cava. Cava continues to struggle, has been for a while, but in general, the sparkling wine category, which is up 3.1% in total, doing very, very well. As we move over to the right-hand side, looking at other segments of the wine category, specialty wines growing 24.9%. And really what's driving the specialty wines are fruit-infused wines. These are other than standard or wines with a little bit of fruit in them. We're seeing more and more of those come out into distribution, and it's driving pretty significant growth in the specialty area. The other category, that really is all about our ready-to-drinks, the RTD. Those are wine-based cocktails. So those are products that the consumer really isn't largely even seen as being wine. That is a wine-based margarita or a wine-based Bloody Mary, something else other than your standard wine product. Those things are going to continue to grow. We're going to talk about RTDs pretty extensively. Vermouth growing 6.6%, but that really is all about spirits and moving the bar-based cocktail experience into the home. And as we look at spirits and what's happening within the spirits category, this comes back to the cocktail culture. And spirits are winning. I don't think we can say that enough, or some of you probably have said we've said it enough already. But the big driver here, the big growth engine is cocktails. And pre-mixed cocktails, ready to drink, growing at 75%. There's just a lot of activity here. These products are doing extraordinarily well, and they're doing well in the on and off premise, and we'll talk a little bit more about that later. You see a fantastic growth rate there for cognac. Cognac has been for about 18 months now on a really big growth trend, and those numbers continue. And we expect to see them continue to grow nicely. The other two categories that are showing really significant growth are tequila. Tequila, again, a category I was worried about in that it was so leveraged against the on-premise, growing 11.6%. U.S. straight whiskey doing very, very well also, growing 9.1%. As we know that a lot of those bourbon-based cocktails, and certainly drinking them neat, continues to be popular with consumers.
Thanks, Dale. So one other view of we break down wine segments is priced here and going a little bit deeper, but just in the off-premise. I mean, we've talked for a long time about premiumization and trading up, which has continued probably since the last recession. And COVID just, in one respect, accelerated that, because here we're looking at wine just for bottles, average price per 750 ml. As we go from the left, the cheaper to the higher price tiers on the right. The blue bars are from March of 2020 through the end of the year. The gray is the prior year, but you can see where the growth is coming from. There's clearly starting at that $11 and up range. And then on the bottom, the numbers in percentages are the shares of each of those price tiers as a share of total table wine in bottles. So clearly, consumers accelerated that premiumization, but only in the off-premise. So the nuance of that is a lot of consumers had more disposable income during COVID. Some of their more normal spending habits, the concerts, the travel, et cetera, were locked down and shut down. And those consumers who were in that position were buying wine off-premise rather than a restaurant or in a bar. So instead of spending that $75 per bottle at a restaurant, they were getting that same bottle for, say, $20 in a store. And maybe pre-COVID, they were only buying a $15 bottle of wine. So 15 to 20, that's trading up, but that $75 that they didn't spend in a restaurant down to the 20 was sort of a trading down for them in terms of what was coming out of their wallet. So there's a bit of a nuance there. But long-term, that premiumization trend has been something we've been seeing. And as an industry, I just think it's something we need to be careful of, to not just become a beverage for the kind of elite higher income. I mean, a $25 bottle could be a stretch for a younger, legal drinking age consumer, especially relative to alternatives they have within the beverage alcohol space. So on a per serving basis, we are the premium alcoholic beverage. So it's just, again, something to be aware of, to provide, quality and affordable choices to consumers so that we don't price ourselves out of what they can afford. Now, coming out of COVID in the off-premise, if your off-premise business is still growing versus the numbers last year, that means that you're really doing well. Again, versus last year when everything was up, those crazy amounts. Not a lot of segments, frankly, fit that picture, but some do. So I'm just trying to capture here, while total wine and table wine versus a year ago in the last 13 weeks through the end of April and the off-premise are down, there are some segments that are up. And when you're up versus that crazy up from a year ago, that means that those segments are doing extremely well. So you see those higher price tiers still there. You see Oregon still there. You see French table wine, and then rosé. And obviously, rosé, a large portion of the business comes from France, still up. And then on the far right-hand side, you've got things like wine in cans, still way up. Wine in half-size bottles, still way up. Dale touched upon sort of that wine other or wine specialty, which is in Nielsen lingo, flavored beverage wines and wine cocktails still way up. So those are the segments that were up during COVID, but are still up in the off-premise and represent growth. Flavored beverage wines and wine cocktails is all part of that broader RTD thing. And I don't know if, there's the universal definition of what's in the RTD space, but it's things like the products that you see represented here that cut across beer, wine, and spirits. So if we go back a couple years ago and look at the Nielsen numbers 2 years ago, and then 1 year ago, and the latest 52 weeks, that segment just keeps getting bigger and bigger and bigger. It's closing in probably now as we're speaking over $10 million annually. And you can see the breakdown with representation from hard seltzers being a big, huge piece of it, now over $4 billion and around 10% of the beer category from really almost nothing like 3 years ago. So just huge growth in a small amount of time, appealing in particular to younger, or certainly that's where the growth started amongst younger consumers. And these sorts of products are delivering on their interest in one or more of things like flavor and variety, in some cases like an effervescence quality, convenience packaging represented by cans, and products, not all of them, but many of the products delivering health and wellness related attributes, among them things like lower calories, gluten-free, lower ABV percentages. And those attributes may be just as important as the base liquid itself, whether it's beer or wine or spirits, as long as it tastes good. So, and we see that you saw that in the numbers that Dale showed. If I look at the Nielsen numbers across different segments, and again, these blue bars here are growth rates in Nielsen measured off-premise channels, March of 2020 through the end of the year. And it's organized by the biggest segment being table wine, then sparkling wine, all the way to the right-hand side. But you can see that growth in flavored beverage wines and wine cocktails, and that would include the spritzers and Bellinis and mimosas and other sorts of things that are out there that are just growing, at these fantastic growth rates. And before I leave that, I'll just, on the right-hand side, you can also see the still continued growth in cans. 3-liter box certainly benefited in terms of COVID tailwinds when people were rushing out and buying bigger things. So that's certainly a format that continues to expand its presence in the category. And then the half-size bottle. And so this is off-premise, but we think that it's poised for growth as well in the on-premise, because it hadn't been as well penetrated in on-premise pre-COVID. But there are some consumers who say that they're choosing more drinks in bottles and cans since the start of COVID in the on-premise because they're looking and seeking a safer option. So that's from the consumer perspective. From the operator perspective, they view that these formats favorably as it's pretty efficient to serve. You don't have to do the pouring. You don't have to take the drink, and it might spill on the way from the bar area out to a table. So there are both consumer benefits and operator benefits, which is another reason why this segment we feel is just continues to be poised for long-term growth. And Dale, I'm talking about on-premise here. Maybe you can back that up with some actual numbers from the on-premise.
Yeah, and again, this is the SIP source data, and we're able to look at the on-premise, and this is just a breakout of completely on-premise and only looking at data from an on-premise standpoint. And what you can see here is that there is only one segment within the wine and spirits that is growing in the on-premise, and it's pre-mixed cocktails. And they're up 5.8%. And remember, this is a category that is down 50%. And as we look at that, we do, as Danny said, really anticipate this continuing to move on. And with the labor struggles that we know that that operators are facing, they're going to have to continue to look for efficiencies. And pre-mixed cocktails for the on-premise operator really do hit a lot of positive attributes. So we anticipate that they'll continue to grow. Back to you, Danny.
Yeah, and so whether it be off-premise or on-premise, this this RTD thing that crosses beer, wine, and spirits has just got a lot of legs. And, we've touched upon some of these. I've just sort of bulleted out what we think are the major growth drivers that appeal to consumers. Not all. It doesn't appeal to all consumers on all of these, but it appeals to some for each of these. And things like even ingredients. I mean, in some cases, consumers are looking for certain organic or natural or pure ingredients, and in other cases, the marketers are talking about the lack of certain things, like lack of sugar and so on. So it goes from ingredients to almost no ingredients. But the one thing is, it's occurring across the beverage alcohol aisle. It might have started on the malt beer-based side, but now it's not just that anymore. I think one question that we've certainly had is, okay, this is all, we see all this. Where's that coming from? Like who is, as this is growing, who is giving up some business because of it? And one thing that, it's not a great story in this case, but when we look at total alcohol purchasing among hard seltzer buyers, wine share of that total alcohol purchasing among hard seltzer buyers, along with core beer segments, has been negatively impacted. So we do need to be concerned about this. And, we need to figure out how do we, how do we fight back against it, and or how do we participate as part of it? So, Dale, I mean, what else can you maybe tell us, shed some light on how consumers perceive health and wellness related attributes of these different categories?
As we look at this, and this is a study that we did at the Wine Market Council, and was really, the theme of it was looking at the role that wine played in a wellness lifestyle. And we just simply asked the question of, how do you associate each beverage category here with the attributes that you see listed there on the left? We did this in association with Nielsen IQ as our partner. First thing that comes out here on this right-hand side is that, the majority of people just don't associate alcoholic beverage with wellness or health attributes. Over half of them just say none of these do fit. But when we think about what's going on with hard seltzers, and we specifically broke out hard seltzers, what you see there is that hard seltzers are ticking the boxes on being low in calorie, low in carb, containing less sugar, and being a good option when they're on a diet. But they don't really tick that overall, it's the healthiest beverage. The consumer still sees wine as being a healthier beverage in general than beer, spirits, and hard seltzers as those come in. So when consumers are making the choice between these, there are consumers out there that certainly are choosing a hard seltzer over wine because of a low cal, low carb, less sugar attribute, but it's really not this overall healthiness that is driving that. We as a category with wine need to figure out, how do we make that prevalent and what do we do there? And it's not an easy task to do with the laws as they are. Back to you, Danny.
Thanks, Dale. So I'm going to wrap up with a couple slides hitting on kind of a different segment, but an important one for many of you, and that's on the DTC side. So here we're looking at DTC wine shipments based on Ship Compliant and Wines Analytics numbers. So we went back to 2017, looked at volume and value growth. You can see how that growth had eroded, still growing, but had eroded from where it was in 2017 and 18 into 2019, and the slowdown. But then all of a sudden, again, COVID, tasting rooms were shuttered or were prevented from doing the business that would have been typical pre-COVID. And so we saw this huge growth rate in 2020 for DTC wine shipments, with volume up much more so than value. So the average price did decrease. And that was particularly the slowdown, or the difference in volume versus value, was at those really higher ends, like over $100, where people weren't spending as much in that price tier. And people were coming into the DTC wine channel, but buying at prices that were more affordable to them. Maybe they hadn't bought in that channel. They were used to buying wine in stores, but weren't going to stores. So they were buying at prices more typical of what they would have spent. Strong growth has continued through Q1 of 2021, up 17%, with now volume and value at the same level, which is actually a good thing. And then in April of 2021, and here I'm comparing against 2 years ago, so shipments are still way up versus where they were pre-COVID. And that's a good sign, I think, consumers or wineries rather adapting their channel business to not just meeting the needs of consumers who are coming to visit them where they are, but rather wineries reaching out to consumers where they are and where they live. On the right-hand side, I just indicated, what are the segments in terms of varietals, origin, price tier, and winery size that stood out growth-wise. I'll point out maybe that price tier. It was the sort of $20 to $30 category that was growing the fastest with, again, I think new consumers or new people coming into buying in the DTC channel at prices that were more affordable to them. And the other thing is that large wineries, those doing over 500,000 cases of the year, that are largely or more predominant three-tier and wholesale players, are also penetrating the DTC space to a much larger extent than before. So while they may not be the biggest percentage of the DTC channel, both in overall size, but certainly in terms of numbers of companies, they are growing the fastest at prices that are more in that sort of $15, $20, $25, $30 range, not necessarily the 100 plus. And then one last view of the DTC channel, and this is courtesy of Community Benchmark that aggregates total DTC channel business from participating wineries. Actually, about 270 wineries are included in these numbers, from wineries across Napa, Sonoma, Central Coast, Amador County, Lake County, Mendocino, and Walla Walla. So it's a pretty broad representation. And comparing current year to 1 year ago and 2 year ago numbers, both March and April sales are above last year, which is not surprising given the downturn last year, but it's above 2 years ago. And again, I think that's a good sign that wineries have adapted their DTC channel business to reach out to consumers and do business with them and not just rely on them coming to our tasting rooms. So that's a overview of the wine business as we see it and how wine is situated against the broader beverage alcohol industry. So we're going to end up just with this summary. And it starts off with wine growth is fragile. I mean, we're not growing as fast as we were going back several years ago. We're not certainly growing as fast as spirits. We have to continue to respond to consumer needs that we talked about through the last 40 minutes or so. We certainly talked a lot about RTDs not being a fad and wine must participate. Being very aware of multiple channels to maximize your consumer exposure, not just stores, not just e-commerce, but both. Be aware of participating or the degree to which you want to participate in both, because consumers are shopping in both. Dale talked about how to look at the numbers. Growth rates are certainly going to be uneven by channel and by geography in 2021. Off-premise, we think, remains the biggest opportunity for the next few months. On-premise is less certain. Dale talked about streamlined assortments. It's going to come back. It's starting to come back. It's a question of, how fast and in what parts of the country the pace will come back. And premiumization, it will continue, but the torrid pace may slow down as COVID impacts are reduced. And also people are starting to spend more on other things, whether it be services, whether it be travel, whether it be even things like clothing. People weren't as concerned about that during the past few months, but spending on other things will increase, and that may impact the extent to which people are trading up. And we've got to ensure that we offer affordable and quality choices, especially to the consumers, younger consumers, that we must rely on for future growth. So Dale, did you want to? I know we're running fast out of time. Do you want to add anything?
Kenny, I think, and to wrap this up in my mind, this goes back to what Danny said right out of the blocks, which is the situation after a year of disruption and turmoil is in many ways right back where we were. And the things that are listed here are similar to the things we would have talked about 18 months ago, but they're amplified. There's sharper edges on them, and there's some detail and nuance in there about the actions that everybody needs to take to win in the marketplace. And so to me, that's really the headline of this is we're after a year of disruption, in many ways, we're back where we were with the same problems that we had, the same positive attributes that we have. So as a category, we just need to go attack this, and it is a game of share.
So thank you, George, and thanks Wine Industry Network. Thanks everyone who's listening, and enjoy the rest of the symposium.
Thank you.